All right, let's run now, get some insights on news that's shaping markets. For that, I want to welcome in Alison Shimada, Senior PM, Head of Total Emerging Markets Equity, Allspring Global Investments. Alison, thank you so much for joining us today. You've been across, obviously, emerging markets, a key part of your focus. Look, we've been watching the sector, and there have been people wondering when would you see some of the performance catch up to what we've seen in the U.S. And after more than a decade of underperformance, we're seeing a shifting story there. Do you think this strength holds up through the second half of this year?
I do actually think it does, and I think that we are quite positive this year about all the things going on in emerging markets. I think that there are many still mispriced stocks in EM, and the reason I say that is because valuations are still quite a bit lower than in the US and the rest of developed markets. So it's the first time in 13 or 14 years that emerging markets is actually doing better. And with it up 13.5% year to date, it is outperforming the S&P and also I believe the NASDAQ as well. So I think it looks quite good for emerging markets.
So what do you think is driving that outperformance, and why do you think, you mentioned there are some that are still undervalued, why hasn't that shifted?
I think it's largely sentiment is the reason for people being very interested in the U.S. and coming back to the U.S. And as you can see here, that hitting new highs, people really like things that have already worked for a long time, and U.S. is one of those asset classes. I think emerging markets is going to take people longer to come back to, but I think as a source of hedging or diversification should be of interest to people at this point, because I think it can do very well. Some of the reasons for emerging markets to do well this year would be declining interest rates locally, the decline of the dollar, which we're starting to see here, and declining inflation in many countries as well. So the conditions are quite good for emerging markets as well.
So the conditions are good. I'm glad you brought up the dollar, because we've been monitoring this in particular. Today, we're seeing some weakness in the dollar, sitting around a little more than a 3-year low right now. So you point to that, obviously the easing inflation and the interest rate trends. When you think about those trends, how sustainable are those tailwinds from your point of view?
I think they are sustainable because the local economies are not in any state of massive distress as they were during previous financial crises. I think governments in emerging markets have learned to operate in a fiscally sound way. And I think you're seeing some recovery, domestic recovery in countries like China. So despite all of the news and, sort of the geopolitical risk that's always pointed out, I think the local economies are operating quite well. And they have a very big source of innovation. AI continues to be a main driver in all of EM, so we will benefit from that as well. That is a big long-term trend.
So AI is a driver, but right now, when I have the conversations about where is the leadership in AI, it's here in the U.S. How do you view the competitive landscape of the U.S. versus emerging markets?
Well, my first comment about that would be you wouldn't have Nvidia if you didn't have TSMC and Hynix, because the backbone of AI comes from emerging markets. And global capex to 2030 for data centers and AI infrastructure is estimated to be 800 billion USD. And emerging markets will continue to participate in that, whether it be data center servers, cooling, power management, early adopters, of course, companies like Tencent and Alibaba, and chips, of course, very critical. So, I think that, yes, all of the focus is on the US, but you wouldn't have the whole infrastructure globally without emerging markets. And I think that that EM companies deserve recognition for that.
Okay. When you think about, kind of the broader landscape of markets beyond the U.S., let's talk a little bit about China. There have been signs of some more of the consumer recovery there. How important is that to the emerging markets story and the sustainability of outperformance in emerging markets?
Yes, that's a good question. I think China, being the largest country, at least within the MSCI EM benchmark at about 30%, is very critical to that, because if China and India as well, and Brazil and some of the larger countries start to work, the sustainability, performance, and interest in the asset class increases. Because as of now, There's been very limited flows to emerging markets overall. But I'd say that it attracts attention when the local domestic economy which is so, it's largely driven by consumer behavior and consumer sentiment and spending in a country like China tends to pick up. It will attract attention, and I think it has been slow over the last 2 to 3 years, but that I think is natural from a sentiment standpoint.
Okay, Alison, great conversation. That's Alison Shimada, Allspring Global Investments. Alison, thank you so much for joining us today.